one tax strategy that could be saving you thousands of dollars on your federal student loan repayments. If this is your first time joining us, welcome. My name is Michael Foley. I'm a son of two doctors, a certified financial planner and student loan professional, and really, the goal with Lifestyle Creep is really just to meet you where you're at in your finances and really help healthcare workers to be inspired to live more humble and quiet lives. But let's dive into what is that one tax strategy that could be saving you thousands. And the answer is the tax filing extensions. This is one thing that people forget is in their arsenal from a tax standpoint that really could be helpful. But before we dive into that, we have to understand that there's more than one way to report your income when it comes to reporting your income on your federal student loans. And so first is you can report your pay stub. You can show them, hey, this is how much I'm making throughout the year. You can report an employment contract, so you can show them your contract. This is what I'm contracted to earn throughout the year. Or you can report your most recently completed tax return as long as it's been within the last 2 years. So the last one is oftentimes the most advantageous one for our clients and opens the door for us to actually manipulate when we file our taxes and what income we want to report. So for any of you that are going through an income increase, which many of us do see increases in our income over time, and especially for residents or fellows or other dentists that have an exponential increase in income, that we can really use the tax filing extension to our advantage to really stretch out how long we report off of a given year. So let's say you have to report your income in July in a given year, right? So usually you would go and file your taxes in April on tax day, and then we get to July. And then, if you go and report your income, your most recently completed tax return is the one that you just filed in April, right? But what if we filed an extension, right? So if we file an extension, you still got to do formalities to file an extension with your accountant, and you got to make sure that you pay your taxes by tax day, but you don't have to technically get all the paperwork submitted all the way until October of that given year. So if we don't have to recertify until July, we could file an extension, and then when we get to July, guess what? Your most recently completed tax return is actually from the year prior. So then we get to make those, we get to report our income off of the income that we earned 2 years prior, and then we get to make payments based off of that for the next 12 months from there. So essentially, we created almost like a 2.5 year lag time of reporting our higher income. So this can be really beneficial, and a lot of people are really excited to show their new contract or report off their pay stub of what they're earning currently. But we don't need to interpret the rules that they're laying out at the Department of Ed in the most least advantageous way possible for you. So, because this could be a difference of, thousands of dollars on a monthly basis. And so if you're going for forgiveness or even the long-term forgiveness, or even just trying to pay them off and using some of the interest subsidies on the new SAVE plan, this could be hugely advantageous for you. So don't forget about that next time you're going to recertify your income or file your taxes. So hope this has been helpful for you, and hope to inspire you to live a more humble and quiet life.